Okay, hey everyone, welcome to today's webinar on finding market direction in Forex. So thank you so much for joining me today. Hopefully you'll be able to learn some good concepts here on the webinar today. Okay, looks like my trade session just opened. Okay, great. Hey, I'm the founder of a website called tradingwithvenus.com. My name is Raman Gill. In today's training, excuse me, I am just recovering from a cold, so please bear with me as I work through this. So in today's training, we will take a look at daily candlestick bars, and we'll learn how we can use these in our technical analysis. What do these candlesticks tell us? And then I will show you a simple trading strategy that I use in my own personal system and how I use this to trade Forex. And we'll go through how do we actually properly implement this strategy, what are some of the things you're looking for, what do you need to be aware of, that sort of stuff. And then we'll talk about one step that most traders miss. So if you are a new trader, or if this strategy is new for you, I strongly suggest that you incorporate the step in your development plan. So just a quick disclaimer before we get started. This is for education purposes only. I am not an investment advisor, so I am not really allowed to give you trading advice or investing advice. So this is for education purposes only. And if you have questions about your investment needs, I recommend you talk to your investment advisor. Okay, so let's get started. So a little bit about myself. I am a Forex trader. My key focus is on Forex markets, even though I do look at commodities and I have a stock portfolio, but my main focus is on trading Forex. I'm a day trader. I've been trading for 7-8 years now. In terms of my background, I have a couple of MBA degrees. You don't need this to trade Forex. However, that's just what I have. I have MBA from Cornell University in the US and Queen's University in Canada here. And prior to that, I have a technology background. I have undergrad in technology. In the past, I worked for many years in the banking financial industry. And before that, I was an entrepreneur, and I had an IT consulting company that I ran for 10 years. So that's a little bit of my background. I do have a family. I have 2 beautiful girls and a husband. So trading allows me to spend time with my kids. They are quite young at this point. So it just provides me that flexibility in terms of having a balance in my in my life a little bit. I am a full-time trader. I am actually working with an investment fund, which is getting put together at the moment. My main focus right now is my website besides trading, which is tradingwithvenus.com. I do produce weekly analysis videos, which over the last couple of months, I've been away and then sick, so I haven't done. So starting this weekend, if you are on my mailing list, or you can go to my website and sign up, so you'll get the weekly analysis. So every Sunday, I send out a video that shows you sort of what to look for the upcoming week. And other than that, there are lots of videos and examples on the website as well that you can go check out. So that's about me. So let's dive into our topic today. So I will go through the slides that I have. I will show you some charts, and we will work through this. At the end, or at some point, if you have questions, feel free to toss them out in the chat, and I will answer them as we go along. So feel free to ask questions. The more questions you have or ask, the better the learning experience will be. So feel free to do so. So when we start trading, what is the first thing that we need to know? Any ideas? Okay, so excuse me. So let's think of it this way. Our plan, yeah, that's absolutely needing to know our plan is very, very important, and is one of the first steps we need to know. But even before we can construct our plan, the one thing that we need to know is is what direction we need to go in, and then we can have a plan in that direction. Yeah, and risk reward is a part of that as well. So think about this in terms of our ancestors. So before, if we take it out of the market context, before, when our ancestors were hunters and gatherers, so first thing they needed to know before they could bring the prize home, which was the animal that they could bring home to feed the family, the first thing that they needed to know was where to go look for that animal. And in today's modern world, as traders, our hunting grounds are the markets. So in the markets, before we can bring home the prize, which is our successful trade, the money that we make from our successful trade, first thing we need to know, what is the market direction? Where is the market going? Once we know where the market is going, we can then create a plan. Then we can set some parameters around that. We can look at some patterns, things that we're going to trade, and we can have a risk reward. We can have all of that stuff that goes into planning a trade. But before you can plan a trade, we need to know where the market is going. And that's what we're going to talk about. So just like our ancestors looked for tracks to find the animals, we look for tracks in the financial markets. Just like the animals left footprints, market leaves tracks as well. And that's what we're going to look at today. What are the tracks that the market's leaving, and how do we use those tracks to find our price in the markets, which will be making our profit from the market. Just like we are able to read these tracks, they tell us a story where the where the animal has gone. We can look at where the market is going, and hence put together a plan to then go and get that. So in terms of our plan, we are going to start by looking at daily charts. A lot of times people will think that only people who need to look at daily charts are swing traders, people who hold their trade for a few days or a few weeks and few months. However, as day traders, we actually can look at daily charts and find market direction as well. I'm strictly a day trader. I have tried swing trading, not really my cup of tea. I may once in a while hold trades for longer, but most of my trades start and finish the very same day. So I'm looking to create income from my trading. I'm not exactly investing. I have other things that I invest on, but in terms of Forex trading, I'm strictly looking to produce income on a daily basis. So that's what I'm looking for, and hence I'm a day trader. I close my trades out, I take my profit, and I'm done for the day. So I will show you how to use daily charts in the context of being a day trader. And then another thing that the daily chart shows us is the market direction. So we look at the close of the candle on that day, and then we find or we predict or a direction for the following day. So just like I talked about animal tracks, these candlesticks are telling us a story, and that's what we'll take a look at, how to trade these. So it is a pure price action trading. So there are no indicators. There's nothing, no fancy bells going off as to what the market's going to do. We are purely going to look at price action and only on the daily candlesticks, and that's what will dictate how we're going to trade the following day, and we can then create a plan for the following day. Again, the daily candlesticks will help us also find the trend, whether the market is in a trend, upward trend, downward trend, or if it's going to change direction. All right, so how do we use the daily bars? So first thing we need to do is we need to look at our daily chart every day after New York close. So only thing that we look at is New York close. We're not looking at Asian close. We're not looking at London close for this particular strategy. Only thing we're looking at is New York close, which is 5 p.m. Eastern every single day. So you can look for the daily candle anytime after 5 p.m. If it's 3 p.m. Eastern, that's not the close. It's actually 5 p.m. Eastern. New York close is what we are looking for. So that's the first important thing. And then within that, we're looking for a strong daily pattern, and we'll get into that a little bit more. We also mark our support and resistance level on the daily charts, and then we could wait for a pullback and enter into our trades. So in terms of taking the trade itself, I enter into a trade on a lower time frame. So if you wanted to trade the daily chart, you can do so. However, because I'm a day trader, I look for a a lower time frame to enter the trade in, just because you can get a little bit more precise on your entry. So here we are looking at actually how to, so this is one step before you get into a trade. First step is finding market direction. And then based on the direction that we find in the markets, that's the direction we're going to trade in. And I will show you that in just a couple minutes here. We'll move on to the charts. So some of the important things to remember here in terms of the charts or the candlesticks that we're looking for will be when the trend is up, we're looking for strong when the trend is down, we're looking for strong bearish bars. So a candlestick that opens high and closes low, showing strength in the market to the downside. In terms of a bullish market, when the market's going up, we are looking for strong bullish bars, which means they open low and they close high, which tells us that the market is very bullish, and the following day we're expecting the market to follow through in that direction. Excuse me. Then we're looking for rejection patterns. These will come at strong support and resistance areas. So some of the rejection patterns we can start looking for are things like pins starting to get bigger in the opposite direction. We'll look at more in depth on that in just a couple of minutes here. And then we're also looking for compression. So when the trend is getting stronger, the candlesticks tend to get bigger. So based on the size of the candlesticks, we will get an idea of whether the market is expanding or it's compressing. When the market is expanding, the candlesticks are bigger. That shows us that the trend is going to continue. However, when the candlesticks start getting smaller and smaller, that means now the market's compressing. Buyers or sellers, whichever the way the trend is, they are running out of steam, and the market may turn now. So those are some of the things we are going to pay attention to. So before we get on to the live charts, let's take a look at this particular chart here. This is a daily chart, even though it doesn't show you any time frame here, but this is a daily chart that I got the picture from. So let's take a look. So now we're going to start getting into the nitty-gritty of it. So any questions before we start tackling the candlesticks themselves? Okay, all right, so let's get into it. So we'll just dive right in. So let's take a look at a turning point. So let's make a turning point. So let's take a look at this one here. So this here is an example of a reversal pattern. So we have the trend has been going up, and then we get a pin on top here, so which shows us that the market is starting to show rejection here. Then we get another candlestick which is red and takes out this candle here. So this is a rejection pattern. It's called railroad tracks, which basically means a bullish candle, and then a bearish candle that takes that out. So this here would show us that for the following day, we are looking for next day the market to go down. And as you can see, the market goes down next day. And then this is what I was talking about, the candlestick getting smaller. See how following a big, huge candlestick, we have this tiny candlestick, a doji looking thing, which usually means that the market is maybe looking to change directions. So we see this, and then following that, when we get something like this, this is a weak pattern, and this is for the next day, we're not going to trade that because we have no market direction. When you get a candlestick pattern like this, the next day our bias is to the downside. So when creating our trade plan, we are looking for short trades. So this is one way to cut out a lot of noise and a lot of confusion in our charts. So first thing we do is look for what the candlestick's telling us. So this is where our story starts. We see that the candlestick is a railroad track, which is a rejection pattern, and this is a bearish pattern, right? This is a bearish reversal pattern. So when we get a bearish reversal pattern like this is a very good pattern. We are looking to sell the next day. So let's say I'm doing this at 5 p.m. today. Tomorrow I get this pattern. So tomorrow I'm only looking for sell side entries. So that takes out 50% of our entries right off the table. We're only looking for, on this particular chart, I'm only looking for sell side. I'm not looking to buy into this market. So this gets you 50% there, right? Now you can have your trade plan and you can look for entry on a smaller time frame, but this way you get the direction. You're only going in one direction, and once you get the direction, then you can take a trade only in that direction. So this is how you find something on the chart. So when you get something like this, it's a strong pattern. So this is a go. So let's say this is a Euro US dollar chart. You get this type of pattern on it. You're going to go for that. And if there's another chart, let's say New Zealand US dollar, and you get a little candle like this, that's a candle we're not going to trade. So we're going to look for something the following day. So this way, let's say you're looking at 5 different charts and you have 2 charts with strong patterns like this. Those are the 2 charts we are going to trade the next day. And the rest we can just leave them alone. So this will cut down on a lot of unprofitable trades right off the bat. Okay, so now let's take a look here. So here we have a strong bullish candle. This candle engulfs this candle. So this is an engulfing chart pattern. And because of that, it means that market will get bullish from here on because it's completely taken out the previous bearish people. And just a quick note here, this is strictly for the daily chart. We're not talking about any other time frame at this point. This is strictly daily chart only. And really what we are looking for is just like we talked about market leaving or animals leaving tracks, and then we follow in that direction to get to our price. It's the same concept. We're looking for market. As market leaves tracks, then we just follow along with this. And one of the reasons, actually, just a quick background on why we look at the daily chart is because to be successful is better to follow somebody strong into the market. And the strong players, the big players, big financial institutions and big hedge fund managers, they don't trade from smaller time frames. They may get into the trade on a smaller time frame, but they tend to hold their trades over a longer period of time. So what we're looking for is what are they doing, right? So on days like this, they are actually either closing their positions or not pushing the market down. So we don't need to, basically if you look in the longer time frame, they push the market up, then they took some profit, pushed the market up again, and now they started bigger pullback. They closed more of their trades, and the market starts going up again. But that's just the background. So we don't really need to get, if you don't understand like the whole how the bigger players trade, that's fine. Don't worry about it at this point. Just from perspective of day trading, how do we use this to our benefit? And that's why we're going to do this. So basically what we're looking at by looking at the daily chart, we are looking at their actions. What did the big players do? And daily charts will tell us that based on how the markets close. So here the market closed bullish again. It's a nice bullish candle. Engulfing candle takes out this candle. Now we're bullish. So this day, we did not, after this candle close, we did not trade. So this particular day, we were not buying or selling. We were just staying out of the market for this particular pair. However, you could have had a nice pattern on a different pair on a daily chart. You could have traded that pair. But for this particular chart, when we get this type of a candle pattern, this is an indecision candle. We're not trading because we don't know where the market's going to go. And then so we wait for the next candle, and next candle here is bullish engulfing, which is a strong candle, which means the following day, the market players will tend to go in that direction. So we're looking for follow through in that. And as you can see, we have a nice follow through. It was a nice bullish candle here as well. And now we are bullish again. So we got two bullish candles. And this particular day here, as you can see, the this is when stop runs happen. This candle didn't do much. So after this day, we're looking for an entry to go long. And in this case, we would be looking for a long entry. And we'll talk about entries in a little bit here. But right now, we're just looking for what the candle will do. Okay, so after this candle here, we were looking to go long. The market went deeper, pulled back, had a deeper pullback than we would have liked, but it still closed pretty bullish. So this here, even though it's a doji, it is a dragonfly doji, it's a good example of a bullish day. So what this candle shows us is that sellers tried to push the market down and then they failed. Buyers came in and pushed the market back up. So in this case, even though buyers did not get very, very bullish, they managed to take out all the sellers. So all the sellers who were pushing the market down here got overpowered, and the buyers came in with strength, and they managed to close the candle at the close of the previous day. This here is an example of a bullish close for what we need to do. And the following day, we're looking for an up move. And in this case, there is no pullback. Pullback is already done, and the market takes off from there. Again, a very strong bullish candle. And next day, we'd be looking for another bullish candle after that, or a bullish move. So as we can see here, we get another one. And this is a very strong bullish candle as well. So the next day, we're only looking for long entries. And as you can see, we get another candle. And again, it is a bullish candle. So next day, we're looking for another bullish day. So here is something to note. Remember, we talked about compression. Look at the candles, how they are forming here. See how the market turned, and then it started, it's moved, and then took off, just completely took off here. And as the market expanded, as the trend became stronger, the candlesticks became stronger. And then slowly see how the candles are getting smaller and smaller and smaller, and this one is very small. So once we get this candle, the next day we are not trading, because this is not a strong candle, especially after 1, 2, 3, 4, 5, 6, 7 days, 8 days of an uptrend. This is not a good idea. At this point, there are two things we are expecting. One, looking at the market tracks, what are the candles showing us? They're showing us that the move is getting compressed. That means the price is getting compressed. Think of it like climbing the mountain. The higher you go, the harder it is to climb. And this is exactly what the price is showing us. The candles are getting smaller, hence it's becoming more difficult for the buyers to stay in control and push the market up. And also, because there have been a number of positive days, bullish days, now we can expect a pullback, because we don't just keep on going. At some point, these big players have to take some profit, and they need to close out some of their trades so they can actually book that profit, and then they'll start the cycle again. So this is what happens. So once we get to a small candle here again like this, look at this candle, tiny little candle, tiny little candle. And also, we are starting to see pin bar in our direction. So that's not a good thing. Pin bars, anytime you see pin bars, they show rejection. Look at this one here as well. The pin bar became quite long. See how the pin bars were in opposite direction? So sellers were trying to push the market down, but then the market closed up. So in this case, sellers tried to push the market down, but it closed up. Tried to push the market down, but it closed up. Here, it's the opposite. buyers tried to push the market up, but then it didn't quite close that strong. So the sellers came into play. So once you see the pins starting to get closer, pins start to get longer and the candles start to get shorter, that is an indication of a turning point. So we can expect either, so we'll have to wait for the market to show us what it's going to do next. And hence, once you see this candle, we don't trade this particular chart then, because the market has moved up, given us lots of profit, and now we need to just sit it out. This is the day when we don't trade, or we go trade a different pair, because this is not giving us an entry. So we need to look for a solid entry. So we wait for the next day. And next day, as you can see, it's a bearish engulfing candle. This red candle is a lot bigger than the green candle, and it totally takes it out. So we see buyers trying to push the market up, but then the market closes lower. So this is a strong bearish candle and a bearish reversal pattern at this point. So now we know that the market is looking for a pullback. So whether that's a pullback or a trend change, we don't know that at this point. And really, we don't care, because all we care about is, what do we do tomorrow? So this is the analysis we do the night before, or before you start your trading. So let's say you're looking at this in the morning before you start your trading, you would be looking at a previous candlestick. So this is what you would see, and part of this candlestick would be, it will be forming because the Asian session would have started. Or if you're looking at it at 6 p.m. Eastern after the New York close, then you're preparing for the next day. So whether that's your Asian session or whatever that may be, or next day London or New York session, but this is what we would do for each one of those. So based on this here, we expect the market to go down the next day. And as you can see, market drops, and then market drops again. So the next day we're looking for a pullback and a sell, and then we get this type of a candle. Again, small candle, pin bars. With this candle, pin bars in the bottom, that's not a good sign. Anytime you get a pin bar in the direction you're going in, that's a cautionary candle. So you have to be careful with this one. And then the next day we get a small candle like this, which would show us that the market is in indecision mode. So it's looking to go go either way after this one. So this is when we would not trade this particular chart. We would go look for a stronger daily pattern on a different chart. So we wait this one out, and the next day, this is where it's a strong bullish candle, and we would look for bullish follow through on the next day. And this is where we get to be wrong. Right? So this is, excuse me. So this is not 100%. There's no 100% way to predict the market. So this is not 100%. So there will be times when we will be wrong. And this is one of those times when we will be wrong. So on this day, we either would not find an entry to go long, because we go on a shorter time frame to look for those entries. If either we will not find an entry to go long, or if you do enter a long trade, chances are we would be wrong and we would take our stop loss. So this is not 100%. None of the strategies are 100%. So just like that, we would be wrong on this day. So then we know that the candle closed like this. This is a very, very bearish signal. And as you can see, this is an engulfing candle, just like this one, or just like this one. It's an engulfing candle. It's a long engulfing candle, which is a very strong signal that we're looking for a down move now. Sellers are in control. We're looking for market to go down the next day. And as we see here, market does close down. Buyers try to come in and push the market up. Market closes down. This may be a Monday or something, because the market did not move too much, but it did close at the lower end of the price. So this is a positive sign. Anytime you see these type of candles, this is a shift candle. This is where, like for example, this one here, see how the sellers tried to push the market down, but it closed up. It's a shift in momentum, and now the price will start moving up. This is a shift candle, shift in momentum. Sellers get to be right, and then they get to be in control and start pushing the market down. Same way with this candle. This is a shift candle as well. The power is shifted from sellers here, because sellers tried to push down, but the buyers came in control. So this is a shift candle. So it's important to remember candles like this, because we can get some nice entries after this in the direction that this type of a candle closes. So here we see the price shifted to the upside, here price shifted to the upside, here price shifted to the downside here. So the next day we are looking for, because the price closed in the bottom here, we're looking for price to go down the next day. And as you can see, the price goes down, and then we get this candle. After this candle, we are not trading this chart, even though the market has gone down and followed through. We're not trading this chart because we're seeing a long wick in the direction we are going. The candlesticks are getting smaller, wicks are getting larger. This is not a good indication of a strong market. So we only want to trade a strong price move. We don't want to get into these tiny little candles. It's best to go to a different chart that would give you a better pattern and trade that. So this type of mess we don't trade. This is a nice strong close here, but this is again one of those times when we are wrong, just like this one. Either we would not get a short entry, or we would lose it, lose our trade. So in all these days, we have lost a couple of trades, but we have been right many times as well. So you're looking at about 80% win rate on this. So I suggest go test it out in your Forex tester or some sort of a back testing software, or just go backwards on your charts and look it up. And then the following day, we get a very, very nice engulfing pattern, which shows us that the market will start moving up. And then we get this double bottom type of pattern here, and the market starts moving up. So that's a brief view on how we read the candlesticks. So any question before we move on to some charts here, live charts? Okay, so while you guys are thinking of the questions there, let me switch to charts. Okay, here we go. Okay, good. So sounds like things are making sense. So let's move on to our charts now and see how we can apply this in live market conditions. So here we have, we're looking at pound US dollar daily chart. So I look at this chart every day at the end of the day to prepare for the following day, or in the morning, just if you haven't looked at your charts at night, if you haven't prepared, then you can do this in the morning. So you're just looking for a previous candle. So here, for example, let's take a look here at this one. See how we had we got a big pin on the upside, and then we got an engulfing candle. So this would suggest that the price would move down. So I'm looking at pound US dollar daily chart here. So, and the next day we see a follow through. However, so we would get this trade right. However, this candle is very, very small. So we wait for the next day. And as you can see here, big pin bar on this candle to the upside. So even though this candle is green, see where it closed. It closed towards the bottom of this previous candle and had a long pin bar on top. So we are looking for the actual shape of the candlesticks. We are looking for the size of the candlesticks, and all of these things tell us a story. This is how we read price action. So on this day, on the following day, we will not trade, and we get this candle. This candle we can trade because it's bearish. It closes towards the bottom of this range, and as you can see, next day we're looking for a bearish move, and we get that. After this candle closes, this is a very, very strong bearish candle right here. After this candle closes, we're looking for another move to the downside, and we get that. And once this candle closes, it's a big pin bar. Pin is bigger than the the body of the candle. So be very careful with this. I would not trade this short the next day. As you can see, buyers try to push the price up and close strongly to the downside. Here, we'd be looking for another move to the downside. But now, as we can see, price is starting to run into this wall here. Candles are compressing. It's getting smaller. And now we are starting to see green come in. And as you can see here, price is starting, this bullish candles are starting to take our bearish candle out, and now we have a push to the downside, and then a nice positive close. So after this candle closes, now we have this a bit of a wall, a bottom formed out here. We are looking for a bullish move, and as you can see, we saw a bullish follow through. So in the lower time frame, so the question is, can we rely on these patterns in the lower time frame as well? In terms of price action, the candlestick patterns will be the same in the lower time frame as well. And however, in terms of the context will be different. So the price patterns will be the price patterns in all time frames. However, the pattern that you see on a daily chart would be a lot more meaningful than it would be on a 5-minute chart, for example. And what do I mean by that? It means that on a 5-minute time frame, on a daily time frame, these are pretty big profits that we are looking at. For example, so let's say we took a short here. Let's say even if we took at the bottom of the candle close here, we're looking at 220 pips. You know, that's a big move. So the moves that we would see on a daily candle, for example, this is another 230 pip move. So these are big moves. On a daily chart, if we see a pattern, we're expecting a big move. So our profit targets, let's say the move is 230 pips, maybe we can get 50, 60, 80, 100 pips out of that trade. So we do have that potential. It will be very difficult, or I have found it to be very difficult to get everything out of the trade. Just because the market moved 230 pips that day doesn't mean we'll get all of the 230 pips. We may only get 30 pips out of the market, but the point is that we know what direction to go in, so we can go and make some money out of it. However, if we don't even know what direction we are going, we could be taking a trade in the opposite direction, because sometimes on the smaller time frame, if you use the same price action things, you could have a pullback on the smaller time frame, but you would not see that on the larger time frame, on the daily chart. So the price patterns will be same. Candlestick patterns, engulfing candle is an engulfing candle, regardless of what time frame it is. The difference is that on a 5-minute chart, the follow through may only be for 10 pips or 20 pips, right? On a daily candle, we can look for the day average trading range for, so let's say the last 5 days, let's say the average trading range is 200 pips. So we know we have 200 pips of runway, and within that we can find ourselves a trade in the direction of the daily or in the daily direction of the market. So that's the big difference here. When we look at the daily candlestick, we just have more room to trade. So as we can see in this type of in this market's just going sideways. We are heading towards the bottom here. So let's go find a different chart. Something that has more direction. Okay, so here I have lots of support and resistance. Let me just delete some so it doesn't distract us. So actually, you know what, let's start here, just because it's a nice turning point. All right, so let's go over the concepts once again. So here we have a market is compressing. So this is a good example of a compressing market. And a good indication of a compressing market is that price goes up and goes down. It's not really going anywhere. When the market is actually working, when it's trending, what we expect to see is, let me draw it out for you. So what we would expect to see is a market going down, then pull back, another push down, pull back, push down, pull back, push down. So what that would show up in terms of our candlesticks would be, let's pick a different color. So we would have a candlestick that would look like this, something like this. And then the next day we'll have a candlestick, we'll have a pullback, pull back, and then we may have a candlestick like this. And the following day we may have a candlestick like this. And then we have a candlestick like this, something like that. We would have these type of candlesticks, and we may have a pin bar on the top or whatever, but the candlesticks are getting bigger and they are expanding. So this is what the trending market would look like. So let's clear this up. And here, as you can see, when the market is not trending, the type of patterns that we see would be more like this, this type of move where it looks like it's going down, but it's not really going down too much. So even though in terms of our trend line, it's still going down, but it's not going down with any type of momentum. It's just going down slowly. And this is exactly what this here looks like. It's going down, but it's going down very, very slowly. When we start to get things like this, that means this is a compressing market, and now we may see a breakout in the opposite direction. So that's what that shows us, and hence I mentioned compressing markets at the top there. So once the market starts to compress, we have to start looking for market to turn. And as we can see here on this particular day, it was a very, very small bar, and then we would not trade this one. We would not trade the following day, so we would not get this trade. But this trade would tell us that the trend is starting to come to an end, and we may see market turning now. And next day we get a very, very good bullish engulfing candle here. This is a morning star pattern, which is a reversal pattern. So we would expect the market to start going up after this point. And as you can see, we have a nice follow through. The following day, we are looking for an up move. We did see a pullback, but it closed at the top. See how the market closed at the top? This is a shift candle. This is where the sellers tried to push the price down, but the buyers came in and pushed it back up. So when you have candles like this, shift candles like this, the important thing is, though, it's not so much the color of the candle, it's how the candlestick closes, how the price is, the shape of the candlestick that makes a big difference. And here, after this candle, we're looking for price to go up, and as you can see, we'll take a long trade, and here the price goes up. We're looking for a pullback. This is just an inside candle, so we didn't get much of a trade here, but the next day we get another bullish engulfing candle. So we're looking to only take trades in the long direction, long trades here. And here we see that follow through and again follow through. And this is when we start seeing bigger pin bars on the top. And when we are going up and we start seeing pin bars on the top, that means caution. So the following day, I would be careful with this candle, even though it's a large green candle. I would be careful with that because we start to get a pin, which is almost half the size of the body here. So I would be just like this candle here, right? So that's why we're looking at the shape of the candle, not just the color of the candle. So it's important to remember that once you start seeing pin bars like this, that's very, very cautionary. And we have to be careful with those candles. The next day we have a pullback, and then the whole symmetry of the market changes. We're not seeing this candle here, even though it's red, it's not engulfing. So we don't have a trade the following day. Here we don't have a trade, very small candle. This is a good candle. So we would be looking to go short. But as you can see here, this is when we are wrong, right? 80% of the time we are correct, 20% of the time we are wrong. This is one of those times we are wrong. But then we get a nice candle to the upside here. After this candle, we don't have a trade because we don't have clear direction of where the market is going. It is a green candle. It is a bullish candle. But look at the pin on top of it, and it's not engulfing either. So we don't know that the market has switched at this point. After this, we don't know the market has shifted. After this candle here, now we're looking at a market shift, because for the last 3 days, price has not moved to the downside, and this candle here becomes an important candle. So as we can see, we see follow through. So let's take a look at a bearish type of scenario here. So this is another. So now, from the perspective of not just one or two candlestick patterns, we're looking at a chart pattern now. As we can see here, we were very bullish. This is a very, very bullish candle, and now we're running into resistance. And this is where I said we need to draw our support and resistance line. So we're not just looking at just the candlesticks. Now we are putting in another thing, which is our support and resistance line. As you can see, this is the top of the resistance here. This is the top of the pin. Even though this candle closed like this, I would not buy after this candle because we are right into resistance. We are at top of the mountain, and at this point we could see a pullback, and as you can see, the price starts hitting a wall here, and once the momentum shifts to the downside, once we see a nice engulfing candle here, we can take a trade here. Very, very strong bearish candle, and now we look for follow through. And here, this candle, after this candle, I would not trade. So let's say we had, let me see if I can move the chart. So let's say a candle looked like this. That candle I would trade. So this candle I would trade looking for move to the downside. This candle is very strong. I would trade that, look for a move to the downside. This candle here has a big, huge pin. So this will be a tricky candle. I would not trade that. So I would look for a trade with a stronger candle in a different chart. So this is where you can have pound dollar chart, New Zealand dollar, euro dollar. You can have your whatever pairs that you like to trade and look for a strong pattern on those daily charts. So whatever chart gives you a strong pattern, that would be the chart to trade. Others you can just leave them alone for that day and look for trades in the charts that are giving you a strong signal. And here, this one is a good candle, so we could potentially trade that. And as you can see, market goes down, but it's an insight. Here we are not seeing a follow through. It hasn't broken the low, so I would be cautious. This would be a cautionary candle. Smaller candle is starting to get smaller now. So there's a follow through, but then there is it's a big pin. So I would not, after this, I would not trade. I would just wait it out. And as you can see, we saw these pins, and then we get a nice engulfing candle here. So this here is a reversal pattern, which is a very nice pattern, bullish pattern here. So we will look for a bullish a trade here, and as you can see, this closes bullish here as well. Hasn't taken it out, so I'd be cautionary, but it is a bullish, nice bullish close. Rejection at the bottom, nice bullish close into the high, breaks the previous high. Didn't break the pin bar, but did break the previous high. So I do like this. And then this one I would not trade because it has a pin bar on the top, and we were looking for trades in the to the upside, long trades. After this candle, I would not trade, even though we would have been able to take profit out of this candle. Once it closes, I would just wait it out, and next day, of course, so we would miss this trade because we were not looking to trade on this particular chart. So it's best to be cautionary, like, look for strong patterns, and then go and take a trade in those charts. Okay, so in terms of entries, now let's take a look at entries. How do you enter the trade? What I tend to do is I would look at my daily chart as the first step to find market direction. For example, this one, very strong engulfing candle, bearish engulfing candle. I'm only looking to take a trade, a short trade on that day, on the next day. So I would only look for short entries. I'm not even looking for long entries. So this is to not do any counter trend trading. So this is just purely see what direction market is going in, look for an entry in that direction. And that's how we can make money from this. Okay, in terms of taking a trade, I tend to look for pullbacks. Excuse me, as you can see here, very strong candle, but it doesn't just start and go down. Normally there's a pullback. So when the candle closes like this, I'm looking for a pullback. So there are a couple of things you can do in terms of pullback. You can go to your smaller time frame and look for a pullback. What I tend to do is I tend to bring other things. Then you can either use Fibonacci and look for 23% pullback. As you can see, when you have a actually this is a good point that you could benefit from. When you have a very, very strong trend, you may not see a pullback more than 23%. So I look for that 23% in a strong trending market. I look for a pullback that's 23%. As you can see, it pulled back to approximately 23%. And then this is where you go into your lower time frame. I would you can go to, for example, 1 hour time frame here. If I can find where that was. Let me go back. Let's mark this up so we can see. Okay, let's go to 1 hour now. I should have checked the day? Sorry. This is 2016-503, so this is back in May. Okay, so we are going back to May. August, just need to scroll back a bit here. Oops. Okay, May, June, here we go. Here we go. So this was a whole 1 day daily candle, and as we can see, we draw over. You can draw your fibs on the daily candle. This is where the candle closed here, and then I look for, on a strong trending day like this, the following day I look for a 23% pullback. As you can see, it almost came to 23. Didn't get past the 23% pullback. So a couple of ways you can trade this. One, I like to look for pullbacks. So I will look for 23 or 38% pullback on a strong trending day. And then I'm looking to trade only in the short direction. So I would take a short entry somewhere. You can look for 1 hour chart, 15-minute, 5-minute chart for entry. I look at a 5-minute chart, but if it's too noisy for you, you can go to a 15 or even a 1 hour chart. This is a nice pin bar on a 1 hour chart, and this is a selling candle. So you could sell here, or you could wait for a confirmation here and then look for retest and then sell. I would sell on a pin bar. We'll do another webinar on pin bar trading strategy, but basically the idea is that you're looking for a pullback before you sell in that direction. So I tend to look for pullbacks because it can give you more of a profit. So this is an extra 35 pips. If you sold here, then we have more room, as you can see, to take a profit. So it was a short, it was a very small range for that day, still 71 pips, but we could have gotten like 45, 50 pips out of this one here. So that's how I look for it. So I look for the daily candle for direction, and then I go to a smaller time frame, and then I look for entry in that direction. Okay, any questions now? So just a review, mark your support and resistance line on daily time frame. We look at a 5 p.m. Eastern New York close, and then we are looking for a strong daily pattern, some of the things that we talked about that I showed you on the chart. Then we are waiting for a pullback, and then we enter in the direction of our daily chart. We are not going against the daily chart, and that's how we enter into a trade. All right, any questions? I see one question here. Yes, yeah. So important point to remember with the daily time frame, when you're in a shorter time frame, the reason I say take an entry from a short time frame, because within that time frame, within the short time frame, a market may go in the opposite direction. So, for example, let's say market close down here. So the market, news can come out and anything else can come out that can change the direction of the market, which is why we are not, we're not looking for entries on the daily chart. We're just looking for market direction on that day. But of course, with the news and everything else, things could change. It is a dynamic market, so do pay attention to your news. But overall, it's the daily chart that will give you the direction for the following day. But within that, they'll be up and down. It's not a straight shot up, right? So keep that in mind. All right, so we have gone through all of that. And the most important step in this, to make sure you really get this, is to go backwards on your chart. I would go back on the chart. I would look at, for example, pick a turning point in the chart. This is a New Zealand US dollar chart. As you can see, the market was moving up, candle started to get smaller, we saw pin bar, and then we saw an engulfing candle. Now the market has shifted, and see how we see the shift candle where the buyers tried to push the market up, and then it closed in the bottom, closed down. So now the following day we're looking for market to go down again. As you can see, the market starts going down. So I would go backwards in these charts. like this, just go on any chart, start. It's the best in the beginning to look for clean directional, like just pick a turning point in your charts and start from there so you can get the practice. So in terms of the overall trend, at this point, we are not, do we care about the trend or not? So we do care about the trend because we are looking at how the candle closed. So we are basically, it forces us to take a trade in the direction of the trend, because that's what we'll end up doing. Because let's say the candle closes green, we're taking next day we're trading up, right? Candle closes green, next day we're trading up. Now the candles are getting smaller, and this is where market starts to get compressed. So we have to be cautious because we may get a big pullback like that. So we do care about the trend, but it's just that the daily candle themselves will help us in following the trend. So this is an easy way to follow the trend without looking for a trend, because we are automatically going in the direction of the trend. All right, so the most important step, like I said, is to make sure you go backwards on charts and find this, like go look for these patterns, go look for engulfing candles on the daily chart, see, and just make a habit of it. Like at the end of the day, just start looking at your daily candle, how it closed, and then also see what happens the next day, right? So you're forward testing it and you're backward testing it. If you do that, it will train your brain to start ingraining that knowledge in your subconscious mind. So the reason people who have been doing anything for a period of time, they can tell you things when you may not see them, is because they have had experience. Their brains are trained to identify those things, and this is how you train your brain to do that. You can actually get a ton of practice even in one day if you go and look at 100 candles, let's say, right? Your brain will start to pick up those patterns, and the more you do it, the better you'll get at it. So make sure you go backwards on the charts, and that's the number one thing that I found. When people do go backwards on charts and do this, practice this, they will start seeing it a lot easier than you would by looking at just one day's candle. All right, so if you guys want to learn more profitable trading strategies like this, more information on price action, I invite you to check out my course. It's tradingwithvenus.com/Forex Course. And right now I am running a promotion which will come to an end at the end of the month. So in terms of the Forex course, you get 8 core video modules, and in that, this is one of the things that I cover: how to look at the daily candles and how to take entries with that. I also look at different candlestick patterns. We go more in depth in terms of the candlestick patterns, what they mean, and how we trade them. I also show you the proper way to do fundamental and technical analysis. I found that when I first started trading full-time, I would come to my charts and I would say, okay, where do I get into the trade? And I see that a lot of times what I found was nobody taught you what do you do in the beginning of your day, right? How do you prepare for your day? What are some of the things you need to look at? I was never taught that, and I spent thousands upon thousands of dollars in terms of training. And as a professional trader, whether you're part-time or full-time, you do need to know what's your process. So that's one of the things that I teach you. And then I also go into some of my signature trades. I call them my signature trades because I didn't develop those trades, but those are the trades that I have personally found to be very, very profitable, and they're easy to see as well. So I'll share those with you. And then also we'll talk more about risk and equity management, how to make sure you're actually profitable in your trading. Some of the reasons you should buy this course is because I simplify things a lot, so you will not hear a lot of complicated. I don't overly complicate things. I like to simplify things, keep it simple, keep it clean, which makes it very, very easy to trade. We'll look at some of the practices throughout the course. I'll show you different practices that you need to do to make sure you're getting the most of this. We'll look at some of the mindset hacks, things that you need to do on a daily basis to be profitable. And then it cuts your learning curve in half. So instead of trying to, taking a whole year or 6 months to learn, you can learn these concepts in a couple of months. And then, of course, the cost of the course at this point is $297. It will go back to its original price of $497 at the end of this month. So if you would like to learn some more of these strategies, I invite you to go check it out, and feel free to get it before the price goes up on September 30th. And as bonus, you will also get 2 one-on-one coaching sessions with me. If you don't understand anything in the course, feel free to book a session with me, and I will I will teach you that concept myself. What I generally recommend is go through a few modules, make a note of your questions, and then book a session with me, and we can go over anything that you don't understand. I can explain that to you myself. We'll look at charts, and I can give you examples, and I'll show you how to do that. You will also get full month access to my Forex trade room. So all the concepts that I teach you in the course, you will see me implement those in the real live market. So you'll get to see me take trades. I will tell you, or I will show you where I'm entering the trade, where I exit the trade, where my stop loss is, where I set my take profit, and how I manage my trade. So you'll get to see all of that. And of course, you'll have all the sessions and recordings. You'll have lifetime access to that. And you will get unlimited support from me. Just email me or Skype me, and I'll be able to help you with any of those questions. So any questions before we call it a wrap? Oh, you are welcome. So if you want to go register for the course, you can go to tradingwithvenus.com/Forex course. If you want to if you want to attend more webinars like this, I do a webinar every other week. So you can go to tradingwithvenus.com and look at the webinars page for the upcoming webinars that you can join. Well, thank you so much, guys, for attending the session with me. And you guys have enjoyed the rest of your weekend, and I will see you either in the training sessions, on the webinars, or I'll see you in my classroom or trade room. Okay, have a good day, guys.